Hey everyone, welcome to the Trendline Investor channel. In this video, we're going to look at a 13-year, a 15-year, and a 17-year breakout and two other stocks. But along with this, I'm also going to teach you how to trade the multi-year horizontal breakouts, and it's going to be really interesting because these are the setups which will give you multi-bag returns, and hopefully these three stocks, these multi-year breakout stocks that we're going to discuss today, hopefully will be multi-bags as well. I'm sure you're excited. I'm excited as well. So let's get started. As always, we're going to start off with the Nifty Outlook because Nifty has given a very strong bullish reversal this week. And I'm going to start off with that and then we'll continue to the other stocks. So I have the Nifty Outlook chart in front of me. And so last 2 weeks, I was stressing on the wicks that were forming around this major support zone. And this week, we had a very strong bullish reversal. But the major question is, has the market bottomed? Now, this I cannot tell you right now until we break out from this falling downward channel. If we kind of break out from this, then probably we can say for sure that market has bottomed finally. But the most interesting part to notice this week or this month is the doji which has formed on the monthly charts. Now, after 3 strong red candles, finally we had a doji, which means there is a sign of indecision between the bulls and bears, and this is probably a pause in the downtrend, or this could also be a beginning of an uptrend, because remember, we are already in an uptrend in the weekly charts. On the daily charts, we are in a downtrend, but on the weekly charts, this is an uptrend. And if we break out of this downward channel, then we are probably resuming the long-term uptrend that started somewhere here, right? So index is still around a major support zone. So in case we have to turn bearish, then I would turn bearish only if we break the support zone and go below. Until then, stay bullish. Nifty is bullish. While the overall markets are still bearish, Nifty is still bullish. Okay, so having said that, let's move on to the daily charts just to see what the channel that I just said is showing. So here, if you see, we had this beautiful channel setup, and as I said, we need to break out above that channel and also take out that level of 17,800. Only then Nifty on the daily charts will be in an uptrend. Until then, there's every possibility that we go up and we again come down, probably go sideways as well. Now, no one can tell what happens, but for now, there is a short-term trend change above 17,210, which was this. We opened up with a gap up, and that Friday move was very, very strong. Okay, so overall, even CCI is kind of now breaking out. I think if we cross 100, then that shows some bullishness, and then probably we might also break out from the channel. Okay, so that's from a Nifty perspective, and hopefully we have a good move going forward. So today, the first stock I want to discuss, which is a multi-year breakout, is Career Point. Career Point is looking very interesting from a fundamental perspective because of the way the business aspect has changed. Now, this company has always been in the offline business, offline coaching business, but of late, it has started creating products which is sold to students and others who are studying, exam preparations, all of that, and that has brought in a change in the fundamental of this business. Okay, so let's take a look at the fundamentals first. Now, this is a very small company, 390 crores. It has a stock P of 12, ROC and ROA are not that great. But if you look at the P&L from 2011 until now, the sales has kind of been stagnating always. But what has changed of late, at least in the last couple of years, is the operating margin here. The operating margin has hit 55%. We'll come to the reason of that shortly. But overall, if you see, this has been kind of a profitable business overall. But in the last couple of years, operating margin has gone up from almost 35% to almost 55%. And it has been sustaining those operating margins for quite some time, because of which this company has posted an all-time high PAT at 32 crores. Okay, so that's why this stock has come on my radar today, along with the technicals also. But before that, I'll show you why this company has hit such high operating margins. Now, if you look at this presentation from the company, which was posted around February 2022 or 2023, if you look at this part over here, operating profits, the improved margins have come from the educational products, which has led to a higher profitability. Now, these are the products which are sold online. And remember, this is a very easily scalable business. They just have to create a product once or create a course once, and then there'll be hundreds of thousands of students buying it over and over again. And that is what is leading to the higher profitability of this company. And I feel this could be one of the key reasons that the company might perform going forward. Also, I don't have the slide here, but they've also mentioned for the next many years they can grow at 20% CAGR. That is also a very bullish sign. But keeping that aside, which is not really predictable, but this is a very, very good sign in this company. So that's from a fundamental perspective, and that's why I'm looking at Career Point today from a fundamental perspective, and that's the first company we're looking at. But looking at the technicals, here I have the monthly chart, and look at this beautiful multi-year breakout. Right, a multi-year. This is almost a breakout since 2010, almost 23-year breakout, not even a 13-year breakout. Since 2010, the stock has been in a downtrend, and the first time we are seeing a major breakout on the monthly charts after retesting this zone almost 3-4 times. Right, so we finally had a bullish monthly closing this month, and this is looking really good on the technical chart perspectives. How should you trade this multi-year breakout, right? So I'm going to go ahead to the weekly chart and just tell you how you should be trading this multi-year breakout. Now remember, this is the first time we've had this stock closing above this major horizontal resistance zone. Also CCI is bullish, relative strength also is bullish, but the stock is quite extended in the short term. Now that's what I mentioned here. It's very extended in the short term, but in the long term the trend has changed. So how should you be trading this? Now, there could be every possibility that this stock can just shoot up one way and go up another 30-40%. Now, for that reason, you can already take a short position, a small position, probably risking 0.5% of your capital. And in case it goes up 30-40%, you don't want to miss that major move, but take a very small position, risking 0.5% of your capital. Now, the second thing is, in case this stock doesn't just directly go 30-40%, your 0.5% risk that you're taking will still be there. But if it dips, if it kind of drops and consolidates and moves towards the levels of 200 odd levels, the current market price is around 214. If it comes around the zone of 180, 190, then definitely you could add more around the stock, look for some bullish candle reversals, and then you can add more to the stock. But keeping that aside, the volumes have been beautiful, have been excellent. In fact, the last time we had such high volumes was somewhere in July 2022, and this week also we had some high volumes as well this week, and a beautiful breakout as well. Okay, so you can buy the stock at 214 current market price. Keep a stop loss of 160, which is 25%. Yes, it is too deep, but as I said, if there's a dip, do go ahead and add more and try to control the risk and bring it down further, right? But I don't trade usually with such big stop losses, but whereas I control my position size, and then if the stock consolidates, then I buy more. But you're looking at a target of 500, which is almost 133% returns from here. I easily think the stock can head back to the levels of, listing highs there. I don't see any major resistance over here. So the stock can easily head towards the levels of 500, which is 133% return from here, which is also 5 times the risk that we're taking. So that's the first stock today. I'm sure you're thinking whether this stock can be a multi-bagger. Before that, do let me know what you think about my analysis, or if you have any thoughts, do let me know in the comments, and I'd be happy to learn along with you. The second stock today is also a very interesting stock, which is Kirloskar Brothers, right? Now, this stock also is a multi-year breakout stock. Now, as always, I'm looking at the fundamentals first. This is kind of a small cap company, but bigger than Career Point. It has a pretty good PE, ROC and ROE also kind of decent. It's not very overvalued, I'd say, but for me, the most interesting part here is again the operating margin in this company. Look at the operating margins after many years. After almost 12 years, the stock is again, companies again posting operating margins of 10%, which is very good. Also, the sales has hit an all-time high, right? In spite of this, the stock is just breaking out from a very long consolidation. Also, for that reason, the PAT also has increased. It's almost, double, not double, almost 20-30% higher than the PAT we had in 2021, which is also a very good sign. And the stock is not really expensive. The stock hasn't moved yet. So looking at the monthly charts, which is again a multi-year breakout. Now here, this breakout is a 15-year breakout. In fact, this also is almost 18-year breakout. Since 2004, the stock has not really performed. But again, exact similar pattern to what we had in Career Point. Here again, 1, 2, 3, and 4. So the difference between Career Point and this is, in this stock, the breakout already happened in 2021, and then since then we had a 22-month consolidation now, which is a very good setup compared to Career Point, because Career Point has just broken out. It is already extended, but here this is not extended. It is consolidating beautifully, and I think this retest is done, and now we are probably heading higher from here, right? Again, it's a beautiful setup, 15-year breakout. And it has stood strong in this weak market. Excellent relative strength. Okay, retest also is complete, and I think now we should head higher here. Now zooming into the weekly charts here. Now this is what I call a confluence of supports, or kind of a very good setup, right? Now here, if you look at this point here, now we have this beautiful channel support here. We kind of retested the zone, which also is a major support zone over here, and now we kind of retested, and now we are kind of heading higher. Now this stock in spite of the weak market, has again tried to hit 52-week high, right? Now, also it had one of the highest weekly closes, along with latest in the strong, CCI is strong on, so volumes have been decent. So overall, I think this could be the bet for the next 1 year or so, with just a stop loss of 14%. The current market price is 408. So we're going to keep a stop loss of 350. Now, if you think 350 is too high a stop loss, you can go to the hourly charts or daily charts and try to find some setup or some stop loss which is comfortable for you. Okay, so we're going to look at targets of 600 or even higher. Now, 600, I've been very conservative and I kept around this channel, middle channel support, but you can go even higher towards the 1000 or even higher. We could also head to, all-time high. Who knows, right? So that's why I always say ride the trend. But I'm looking for targets of 600 which is a target of 47%. Right now, that's the second stock for today, which is a multi-year breakout stock. Now, the third stock for today is Sandesh Ltd. Now, this is not a multi-year breakout, but again, this is from the media space, the printing space. Again, a very small company. ROC and ROE are pretty good. Again, this company also has a similar pattern in terms of the operating margins. Here, I don't have the recent quarter, but look at this the P ratio, the EPS over earnings per share, right? Now, earnings per share has hit an all-time high, while the stock hasn't moved, because of which the PE has been consolidating and just going sideways. It is one of the lowest level. 6P is almost median PE is 6.8 and it's trading currently at 6.16, which is even lower than the median PE. And that, for that reason, the stock is undervalued. And the last couple of quarters have been excellent results. Again, the margins have been very good. You don't see it here, but if you see, we dropped towards 20%, and again, we are back to 24-25%, right? And also, PAT has hit an all-time high of 120 crores. Which has come from the other income. So do let me know if you know what this other income is. I've not done a very deep analysis, but I think overall this company also is a profitable company and can do well going forward. Okay, so the PE also is kind of not moving, which means the stock is not doing much while the earnings have increased drastically. Okay, so this is a chart that I have in front of me, which is the weekly chart. Again, it's a beautiful primary trend line reversal. So this is the COVID lows. We've not moved much from the COVID lows, right? We're just forming a higher high, higher low. Again, we hit a new higher high and we are forming a higher low again. Look at this bullish candle. In spite of the weak market, the stock had a crazy move up and there had been a sell-off because of the weak market probably, but again, we had a bullish candle. Right now, that shows that there is a strong buying here with humongous volumes, right? The volumes have been massive here. And I think this consolidation is probably over and we might head higher. So the stock is trading currently at 960 levels. We're going to keep a stop loss of 18%. I know this week stop losses have been a little deep, but that's because of the swing lows are also pretty deep and they're small cap stocks also. So try to find your stop loss on the early charts or so and try to take a trade. But we're going to look at target of 1500, which is 56% from the current levels, which is 3 times the risk that we're taking. And that's the third stock for today. Now, if you like my analysis until now, don't forget to hit that subscribe button and don't forget to like this video. And also do me a favor by sharing this video with your friends or at least leaving a nice comment on the comment section so that I also get some benefits. Okay, so moving on, the fourth stock for today is Alkem Labs. Now, this is one of the best companies of all the 4-5 stocks I'm discussing today from a fundamental perspective. Now, we all know Alkem Labs is very popular. So for that reason, I'm not commenting on the fundamentals. I'm directly switching to the technicals here. Now, here also, Alkem Labs has retested this primary trend line support. Now, look at how beautifully the stock has corrected. Just beautiful lower high, lower low. And now we are forming a higher high, higher low. Right now, that's a beautiful breakout that we had this week, this month. It's almost a 1-year base consolidation breakout, retested the primary trend line. So I do not think the stock is going to go down further. There might be some sideways move, but overall, the CCI has been looking good. Latest trend is good. Volumes have been decent here. If you see, there's been a spike. We had some few weeks of consolidation and again a breakout. So overall, this is one of the lowest risk setups today. So entry at current market price 3,400. Stop loss of 12%, which is around 3,000 levels. And we look at targets of 4,500, which is 30% from here. We can ride even much higher. This could also be investment core portfolio pick. You can see much higher levels, probably 50 to 100% returns in the next 2-3 years. But for now, I think let's be conservative and look at all-time high, slightly above all-time high targets. Okay, so that's the fourth stock. And the final stock for today is Royal Orchid Hotels. Now, disclaimer, there has been some news floating. In fact, there was an announcement from the company. There was a show cause notice. So do trade on this safely on Monday. I have no idea what is going to happen on Monday, but the stock looks bullish from a technical and a fundamental perspective. Okay, so do keep your stop loss in case you're buying, or buy above the weekly high just in case you want to be safe and see what happens on Monday with the show cause notice that has come. Okay, so that's a disclaimer. Now here again, a small cap company, PE 18, ROC and ROA are good for a hotel company, but here the company has hit an all-time high sales, and also the operating margins has hit an all-time high again after many years. After 2011, we had 27%, and now we hit an all-time high operating margins of 29%. Because of which the PAT also has an all-time high of 68 crores, out of which 46 crores has come from other income. So core, if you look at just the core income or the gross operating profit here, it's 67 crores, which is what you have to look at. Right now, keeping it aside, the weekly charts or the monthly charts looks excellent. Again, it's similar to the previous multi-year breakouts we had. A beautiful setup. Now, a multi-year breakout needs to have at least minimum 2 touch points, without which do not consider this as a multi-year breakout. If there's just one touch point, then I would not trade the setup, right? So you have to have multiple touch points, at least 2. The more, the merrier, and more, then that also is going to act as a nice support zone like this, right? Now, we had a nice breakout, but since the last few months, we have been retesting, and now again this month we are reversing with a strong bullish candle. Now, for that reason, I don't think, even if that news is bad, I don't think the stock will correct a lot. I think if you can keep a stop loss, and trade it properly, I think you will just do fine. Now, this volumes that we have seen this month has been also pretty good. Compared, we see all these spikes over here. So volumes have also been good, and I think this stock might do well. So again, I said the volumes this week, the last time we had such good volumes was in September 2021, right? Now we had a inverted head and shoulders breakout, and after that, this is the highest ever volumes we're seeing. So this has been a nice long consolidation, and latest has been very good. CCI also might turn bullish again this week, but for now, this is a beautiful setup from a hotel industry perspective. All the hotel stocks have just been consolidating, not a major correction in any of them. So you can keep a stop loss of 225, which is 10%, and current market 272. Sorry, that stop loss is not right. It's probably much deeper, right? So it's just a math error. And here I'm looking at targets of 400, which is 47%, and that's 2.7 times risk we're taking. So these are 4 stocks that I want to discuss today. I hope you learned how to trade multi-year breakout setups with me. Do leave me a comment and let me know whether you learned something or not. Otherwise, I'm going to leave you here. Take care, stay safe, trade safe. Until I see you in another video. Bye-bye.